Hey, welcome back. It's Jason Walter here. In today's housing market update, I have an update for you regarding mortgage loan forbearances because those numbers rose recently. So I'm going to share a brand new report that was just issued today on that. I also have a mortgage update for you regarding mortgage applications as well as other real estate market updates, so stay tuned. And before we dive into the video, I just want to give you a quick reminder to please subscribe to this channel if you haven't done so already. I post videos about how this pandemic is affecting our real estate market as well as personal finance topics. So I invite you to subscribe to this channel and I'll keep you updated with new developments. Also, please hit the like button if you appreciate real estate market updates just like this one. Okay, let's go ahead and jump right into the video, and I'm going to share my screen with you today because it's so much easier for me to deliver this information as frequently as I can by sharing my screen with you. So I'm going to go over this report from Black Knight. Many of you who have subscribed to my channel know what that is, but in case you aren't familiar, Black Knight provides data and analytics to the mortgage and real estate industries. And they provide some mortgage forbearance data information on a weekly basis, which is really helpful to know about. So here's the key headline here, and that's forbearance numbers rise above 3 million once again. So we've been right around 3 million for the past few weeks, but this is the first time they rose over 3 million in a couple of weeks. This is a report that was just issued today, so I'm actually going to be posting this video tomorrow. So this report was just issued. So in the past week, they saw the number of mortgages in active forbearance rise by 31,000, which is a 1% increase. Not a huge increase, but something to definitely follow as the weeks and months progress this year. So this increase, they say, was driven by limited extension and removal activity. Removal meaning people have actually gotten out of mortgage loan forbearances, along with an increase of forbearance start. So some people actually have been starting the mortgage loan forbearance as well. So there was 50,000 forbearance removals this week, along with 89,000 extensions, meaning they entered into a 180-day mortgage loan forbearance and they opted to do another 180-day extension. And they can do that thanks to the CARES Act. Talk a lot about that on my channel. In addition, they saw 33,000 new forbearance plans begin. So let's go ahead and dive right into this data here. So currently right now for Fannie Mae and Freddie Mac, there's about 1.1 million loans currently in forbearance. And that's really on par with FHA and VA loans, which also have around 1.2 million loans in forbearance. But the share of loans in forbearance is quite a bit more for FHA and VA loans. Talk a lot about this on my channel. So we're about double the rate compared to Fannie Mae and Freddie Mac. So people who have FHA and VA loans really are being more impacted by this pandemic, as we can see in the larger percentage of people who are in active forbearance. Forbearance plan starts are up 15% in October compared to the prior month, with a rise driven by borrowers reactivating previously expired plans. New forbearance activations are down 7% from September, while reactivations are up 50%. That's a really key number. That's really high. That's showing that people who have entered into mortgage loan forbearance decide to end it and then decide to go back into mortgage loan forbearance. So 50% increase of reactivations, definitely something to follow. They say that this is most likely in reaction to the large volume of plans that were removed early in the month. So speaking of the large volume that were removed early in the month, if you didn't see my previous video about this, on the first week of October, they saw a giant drop of people who were in forbearance. So they actually had 649,000 people leave mortgage loan forbearances just in 1 week. And that was an 18% drop. And that was the largest single week decline we ever saw. And that was the first week of October, which was a good sign to see. However, the reactivations up 50% is not something that's positive to see. We want to see people exit mortgage loan forbearance and then not to enter again. So as you see in this chart here, we have the highest rate of mortgage loan forbearances in late May, but we've had a steadily decline ever since then, more or less. And with this big drop here of 650,000 people who had actually exited mortgage loan forbearance, but more or less it's been flat over the past few weeks if you look at total forbearances. However, when you look at Fannie Mae and Freddie Mac, we saw those steadily decline, but FHA and VA have been more or less flat. And so they have been approaching levels higher than we see in Fannie Mae and Freddie Mac. So here's another important thing to note here. So GSE forbearances have declined by 1,000. So GSE are government-sponsored enterprises, so Fannie Mae and Freddie Mac. So it's actually declined by 1,000, which is a common trend we're seeing. However, another common trend we're seeing is that FHA loans have been increasing, as well as VA loans. So FHA loans saw an increase of 14,000 with a jump of 18,000 among loans held in banks' portfolios and private label securities. So this something is definitely something to follow, because we're seeing an uptick of people who are in FHA and VA loans. We're seeing an uptick in those people who are going into mortgage loan forbearances. And just give you a friendly reminder too, I mentioned this in my video about a week ago, but HUD actually announced about 10 days ago that if you are a single family homeowner and you have an FHA-backed loan, you can enter into a mortgage loan forbearance at a later date now. It was set to expire on October 30th, 2020, but now it's going to expire at the end of the year. So these are people who want to request an initial mortgage loan forbearance from their servicer if they have, for up to 6 months, if they have an FHA-backed single family and they have a single family mortgage. So just keep that in mind. You do have this extension in place. They did extend it for 2 months. So if you are having a financial hardship due to COVID-19 and you have an FHA-backed loan, this might be something you might want to look into by contacting your servicer and see if you might want to do a mortgage loan forbearance. And by the way, I'll leave a link up here too, because I made a video about what options homeowners have when they want to exit their mortgage loan forbearance. So check out that video if you haven't seen that already. But going back to this Black Knight report, they say that just over 3 million loans are in active forbearance. This is a key point here. More than 80% have had their terms extended at some point since March. March meaning that was the beginning of when you could actually enter into a forbearance thanks to the CARES Act. But 80% of people had an extension. So that's a 180-day initial period and then an extension for another 180 days. So theoretically, you could stop paying your mortgage if you do qualify for a forbearance for up to 1 year. However, you still have to pay your property taxes and your insurance, of course. So definitely keep that in mind. It also says that with 365,000 forbearance plans are set to expire in October. So we could see increased levels of extensions and removal activity in the coming weeks. So definitely stay tuned on my YouTube channel. I'll definitely keep you posted about this on a weekly basis. All right, so changing gears slightly, according to the Mortgage Bankers Association, they actually just announced this 2 days ago, but mortgage applications increased in their latest survey. So mortgage applications actually increased 1.7% when you compare it to 1 week earlier. And this is for the week ending October 23rd, 2020, which at the time of this video was last week. So the refinance index, everyone knows that a lot of people have been refinancing their mortgages right now because we have record low interest rates. According to Freddie Mac, the average interest rate is 2.81%. And just last week, it was a record, and that was 2.80%. So we're very, very close to record low interest rates for mortgages. So anyways, the refinance index, according to the MBA, or the Mortgage Bankers Association, increased 3% from the previous week and was 80% higher than the same week 1 year ago. So this refinance index has actually shot through the roof when you compare it to 1 year ago. And that is because interest rates have dropped so much, even compared to 1 year ago. Meanwhile, the purchase index actually decreased 0.3% compared to the previous week. However, it was up 24% higher than the same week 1 year ago. So we have seen a decline more recently in those purchase applications. However, when you compare it to 1 year ago, we're way higher than 1 year ago. And by the way, this is a survey that they do on a weekly basis. It covers 75% of all U.S. retail residential mortgage applications. So this is a broad index that they look at. So just want to share this with you today. On top of this, they actually said that the average loan size reached another record high of $372,600. So this is a record high. So it's something maybe to be concerned about potentially if people are really overextending themselves and getting large loans. However, it's much more challenging to get a loan right now, especially compared to 2007, 2008. So I would expect that the people who are qualified, who are actually getting mortgages, are qualified, but we'll have to definitely keep a watchful eye on this. They also say that the results highlight just how strong the upper end of the market is right now with outsized growth rates in the higher loan size category. So what they're saying is that the upper end of our real estate market is really causing this record high loan balances of 372,000. And I talk about this in my video as well, my previous videos as well, because the upper end, especially in California, for houses over 1 million, over 2 million, over 3 million, have absolutely skyrocketed when you compare it to 1 year ago, which is just interesting given that we're in a pandemic. But a lot of people are leaving the cities and moving to the suburbs where they can have more land and a bigger house. So we're seeing the houses in the upper range really increase because people are buying larger houses right now. In addition, the MBA's associate vice president stated that housing inventory shortages have pushed national home prices considerably higher on an annual basis. And this is very true because both on a national level, as well as in California, where I work as a real estate agent, I'm a real estate agent in Sacramento, we're at record high home prices when you can look at the median home price in the US on average, and also the median home price in California. We're at record high home prices. In addition, according to MBA, for a 30-year fixed rate mortgage, they're at an all-time survey low of 3%. In addition, they say the refinance share of mortgage activity increased to 66.7% of total applications. So the vast majority of the applications right now are from refinances, but they still have a lot of purchases as well. In addition, the adjusted rate mortgage share of activity increased to 2.1% of total applications. I talk a lot about this on my channel as well. It's really good to see that this number is very low because these types of mortgages tend to be a little bit more risky. So the FHA share of total applications decreased to 11.7%, and the VA share decreased to 11.4%, and USDA remained unchanged at 0.5% from the week prior. So the average contract interest rate for a 30-year fixed rate mortgage for jumbo loan balances, which are loan balances of greater than $510,400, actually decreased to 3.28%, whereas the average contract interest rate for a 30-year fixed FHA-backed loan increased to 3.14%. So we're still looking at very, very low interest rates right now. And changing gears slightly here again, I want to go over a survey that was just announced through the National Association of Home Builders. They actually just released this report just a few days ago regarding home affordability. So let's just go over that with you right now and let me know what your thoughts about this are. So they say that more than 1 in 4 prospective buyers, which is 28%, in the third quarter of 2020 expect their search for a home to become easier in the months ahead, while 61% expect it will be harder or stay the same. What are your thoughts on this? I have 11,000 subscribers on the channel. I would love to know your thoughts about this. Do you think that now is a good time to buy a house? Do you think now is a good time to sell a house? Let me know your thoughts about that. They also say, by contrast, a year earlier, fewer buyers, 21%, expected availability improvements, and more, 68%, thought it would be difficult to search for a home. They also did some research about different generations as well. So they say across generations, expectations that housing availability will improve rose more significantly among Gen X buyers, which is 21% in the third quarter of 2019 versus 32% in the third quarter 2020. So a significant improvement who people in the Gen X buyers thought about housing availability. And then millennials also rose from 22% to 30%. And it also says that geographically, expectations that housing availability will ease up increased most significantly in the West. So 16% all the way up to 28%. In the Northeast, it rose from 24% to 35%. So here's a graphic depiction of what we just went over, but do you expect house search to get easier or harder in the months ahead? So what are your thoughts on that? Do you think it's going to get easier to look for a house, or do you think it's going to get harder? In my opinion, this is really based on inventory, really, right? So we've seen very low inventory in the US. We're down about 19% when you compare it to 1 year ago. It'd be really interesting to see what inventory does in the next 6 to 12 months. We'll have to see. So those who thought it'd be harder or remain about the same for searching for a house, they say about 61%, which is on par with what we're seeing. But that number right now has been decreasing. So there's a feeling that more people are thinking that's going to be easier for searching for a house in the months ahead. When you look at people who say, yeah, it's actually easier, it's going to be easier to look for a house in the months ahead, that number has been steadily increasing ever since 2019. So about 28% say it's going to be easier to search for a house. And that's today's housing market update. If you appreciated this video and you liked it, please hit the like button. I greatly appreciate that. That helps support this channel. Also, if you haven't subscribed to this channel already, I invite you to do so, and I'll keep you updated with new developments. Also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.